All right, welcome everybody to today's Stock Analysis Friday. My name is Ben, and let's see if your stock today is a 10. All right, so start typing in your stocks right now or ETFs, type them in caps. That way I can see them very clearly, and then we'll go ahead and get going. All right, so it looks like the audio is okay. Everything looks good here. All right, a couple things here. If you lose my audio or if I get even garbled, let me know. Otherwise, I have no idea that things are how they're doing. So just let me know on that. All right, let me go through the few administrational items. Happy New Year to everybody today, and let's go ahead and hit it. All right, first thing I have to talk about are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. We want you to be aware of the risks. It is possible to lose some or all your money trading the market short term, but that's why we use risk capital, and that's why we use risk control. Also, check with your money manager, financial advisor before actually implementing any of the trades we talk about today or recommend, because they know your personal situation. Of course, I do not. And things like, your age, your risk, and how much your net worth is, et cetera, come into play in determining whether some of our trades that we recommend are suitable for you. And of course, like I say, know how to do risk control. We got a ton of books here. I'm going to put the link for all our books in the description of the recording on this. So that'll be available for you if you want to purchase any of these. We're coming out with a new book called The Art of Trading, second edition, coming out next year. And then, of course, we got books on risk control if you need help with that. We also have quite a suite of software tools. These tools were developed over the last 30 years. I've been trading the financial markets. They're really excellent. Best tools in the market today. We've got charting software, we've got scanners, we got risk control software. So we pretty much cover all the necessary tools you need to be successful in this business. And then we back it up with great education here so you know how to use it. It's one thing to have software tools. It's another thing to know how to use it and to develop your psychology along with good risk control. So that's what we're all about, and you can check that out on our website. And then finally, like, subscribe, and share. The more people we can get coming to these things, the more stocks we can uncover, and the more opportunities we can discover. Okay, so thanks for attending, everybody. And now let's jump into it. All right, so I want to cover gold here. We talked a little bit about this over the last, month or two, and it is doing really well. All right, it's heading on up. Our target on gold here is about $200 to about $233. It's pretty expensive. So we think it's going to get up there. It's not going to go straight up. We'll have pullbacks along the way, but it's looking really good. Now, if this is your first time here, let me just go over the layout really quickly here. Notice I've got three screens or three charts. They're all of the same symbol. In this case, we're looking at gold ETF, which is GLD. So I got the 60-minute chart here. I got the daily chart here. I got the weekly chart here. Weekly gives us the long-term look. Daily gives us the intermediate. And the 60-minute gives us the short. This is called multiple time frame analysis. I've written a whole course on how to do this properly. It's very key to choose the right time frames, whether you're a day trader or a position trader or a long-term trader. So these are the time frames we're going to use today for normal position trading. Up here, I've got all our scanners running. We happen to do a lot of day trading as well in the futures market. We have a great day trading room if that interests you. If we have time towards the end of the session today, I'll show a few day trading charts. So that's the layout. I'm using NinjaTrader. Our software is compatible with NinjaTrader. It's compatible with TradeStation and many other platforms like MT4 if you're a Forex trader, or perhaps multi-charts for those overseas trading their local markets. All right, so let me jump in here and get going. Again, Gene just type your symbols in for us in caps. All right, little talk about the crypto market before we head out here. There's a bunch of ETFs, of course, they had the scandal and the whole 9 yards on the FXN market. So, we all are aware of what went on with that. But I got to tell you, the crypto market, even though it's at a very bottom here, all right, I wouldn't throw the towel in on it yet. I think we're going to see a rebound in this market at some time. Not yet. It's still not a buy yet. So do not buy it according to our tools anyway at this time. But when it starts to show signs of bullishness, we will be there. You know, basically what we try to do is not miss the trend, either up or down. Look at the trend down, tremendous short trade there. But now, all right, it's bottoming. So we got to wait for this thing to turn around. Now, if you go back, I don't know how old you guys are, but if you go back to the year 2000, when you had the dot-com bubble burst, remember that time period? That's a period where the dot-coms got destroyed, all right after the tech sell-off. And that's kind of what has happened with Bitcoin. And yet from there, from the ashes, rose things like Amazon, Google, Yahoo. And I think we're going to see the same thing in the Bitcoin market. I think when the Bitcoin market starts to come back, you're going to see the prominent players. All right. So I think Bitcoin's going to be around. I think probably blockchain will be around. But all these are not a buy yet. OK, I do think they will be at some point a buy. We won't miss it if it is. But for right now, it's a no go. All right. So definitely don't forget that. All right. Silver. Let's take a look at that market. That market has been springing up. My only concern with this one here is that, you know, according to one of our indicators on the chart in the center, all right, it's saying that this move up is a correction and not necessarily a new significant move up to a new high. Now, if the signals change, and what I'm actually paying attention here to is something we call the PTF. So this has a 75% accuracy rate. So basically it says that this bottom probably is not the final bottom on this. So no matter what the move up is, it's a temporary correction in a longer term trend down. I know, okay, hard to believe, but that's kind of what that's saying right now. So we're going to hold off. We're going to see if that does for chance change to green at some point before taking out the low. But for right now, we're kind of staying on the sidelines on this one and waiting. At least we'll get a good pullback and we'll see what happens with that when that happens. All right. So another prominent one to look at these days that people like are Home Depot. Let's take a look at that bad boy. All right. So Home Depot, this is kind of an interesting one. Home Depot had a big, I'm going to open up the weekly chart. Now, this is the long-term chart. Every price bar here on this chart is a full week in duration. So it represents basically 5 trading days per price bar. And so we consider this a long-term chart. Now, if you're an Elliott wave person, okay, I'm going to draw the Elliott waves on. Elliott wave basically says there's 5 waves in a trend made up with 3 waves going in the direction trend of the trend and 2 waves going against it. So wave 3, it goes in the direction of the trend. Wave 4 goes against it. That's profit taking. And wave 5 makes eventually a new high. But wave 5 usually is the end of the bullish trend. So if we look at Home Depot, we had a nice move down here and we just hit the target zone. I usually like to see them go a little bit deeper in the target zone, but that's where that one ended. And the other thing too here on this move down, can't quite see an ABC wave pattern in there. So that concerns me. So we've got a possibility of the following. We've either got an A, we're in B, and we're going down to C, which means we're going to go back down into the target zone, or we have had a slight ABC here, maybe here could be B, and wave 4 is over. All right, so what do you do with something like this? Well, we'll see if the lower time frames help us, and they're kind of bullish as well. So basically, this trade was kind of initiated a little while back, and you put your stop at the bottom. If you're stopped out, that means wave 4 is not over, the correction's not over, and you'll have to get out and then start again on the next bottom. But for right now, we don't want to miss the move up. So, Home Depot is not looking too bad. We do have a red owl now on the daily chart. So probably not recommend it for new people right now. If you're already in it, I'd stay with it. Let's take a look at it next week. It may pull back to 290 and then go forward again. We'll have to wait and see. 290 is a point of inflection between basically this low here and here. So that's kind of where I'm coming up with that number here. So usually things pull back, basically to a point of inflection and then make a decision either to go higher or lower. So that's kind of where we are at Home Depot. All right, let's get going here. All right, NVIDIA, let's take a look at that one, and that one for you, Al. And we'll see how that bad boy is doing here. All right, so here is a situation where All right, we're looking for some type of, this is a 3. Let's open up that weekly chart so you can see it better. So wave 3, 4, and 5. So looking like, and here you can actually see a pretty prominent A, B, and C. See that? So that's pretty good. All right, not unusual after a pull up from a bottom to have a retracement. I don't know if you've ever heard of a double bottom, but this is a possibility where the market could come lower almost to the bottom of 4 and then bounce off. And that bottom, when it happens twice, that's called a double bottom. So we could be coming down a little bit. Again, just take a look at the inflection point. We're right at the inflection point. So it could bounce from here as well. So anyway, you want to have your stop as low as possible. All right, just under that bottom. Let's take a look at the lower time frames though and see what the momentum is. I imagine it's coming down on the lower time frames, and it certainly is. So let's take a look at the daily chart. You can see it moving down here, but this is the bottom, but this is red. So let's hold off on going long on this now. And notice this chart here, red in red, PTF saying that it's not done coming down. So it looks to us like it's going to come down a little further. This is the advantage of using multiple time frame analysis, is because we can take a look at the different time frames and say, aha, 60-minute chart has a red PTF, 75% probability that this bottom is going to be taken out, and we'll see what happens. Okay, so I would not go long on this if you're long already, because you may be long as it moved up off here. Keep your stop down here. All right, if you're new thinking about going in it, hold off a little bit. Okay, hold off. All right, so that's kind of how I would play that. All right, so let's take a look at Intel here and see what that's doing. Give that a second to load because that's been screaming to the downside. All right, so Intel's not done coming down. All right, so we had a big move up. All right, look at this, boom and boom. All right, so this is the year 2000. Okay, check out the tech bubble there, boom, and then look what happens. This is, this is something that you have to realize. We've been in a bull market really since about 2009. And Intel represents, you can see the long uptrend on this weekly chart since 2009. And now look, okay? So these huge types of corrections happen after a long run up. And notice this, okay? The year 2000, this was the dot-com bubble, and boom, all right? Bottom, and then we went back up. So what's interesting with this is that we're still coming down, all right? This is bearish, bearish. All the pyramids that look at the fractals in the market and trend trading patterns, that's these little triangles here that we use for initiating trades, trailing stops, and using risk control. All those are still pointing down in the direction of the trend. So this is still coming down. We have, an active pyramid here to the downside. We still could get a retracement, but it is possible to get up from 26 into the 40s very easily and still head back down. But I don't see that happening right away, and we still have a red owl on the 60-minute chart. So this thing is going to go down a little bit more. It looks like we'll take out this low here because that's what this is telling us over here. And then we'll have to see if we retest this bottom here. So I would not be a buyer here at this time. If you're short, stay short, okay? Because that's the best trade you could have taken on that. Super. All right, Eli Lilly, let's take a look at LLY. Adam, how are you? And Happy New Year to you as well. All right, so let's take a look at this. Don't know what you're in this. If you're long, probably you're long on this because you wouldn't be short. All right, so definitely let's open up this chart here. All right, if you're a Elliott wave person, the most powerful wave in the Elliott wave on any trend is a wave 3, and this is a bullish one. So there's your wave 3 there. All right, a couple things here. It's still the owl, which measures momentum. This is our histogram that measures momentum. The owl is still extremely bullish. The pyramids have done a great job keeping you in here, and your stop on this is here. So you've got a lot of room for some volatility if it wants to go up higher. Okay. Now, we're a little word of warning. All right. If you're not in this already, personally, me, I would not get in this now. It's too late. You missed the biggest part of the run. Yeah, you may get a few more dollars out of it, but the bigger risk is the correction. Remember, 3, 4, and 5. And so usually what happens, you know what I find very interesting is when people subscribe to these newsletters or these services that look at the past year or two of performance. The problem with those is every time those traders get in, they're always getting in here, because by the time the services feel safe enough to tell you to go in, the trend is already done. So they put you in real high and then they get you stopped out. I can't tell you how many clients come to me and say, every time I get in late and I get stopped out. That's why. All right. So you got to try to get in early on trends or when things are changing, the change in behavior. That's where the real money is. Okay. And to kind of do that, you almost have to be a contrarian trader. So in other words, what you do technically is look for the time when everybody's buying and then look for the momentum to subside and then go in. Okay. So on this one here, I would not chase this market. Again, you may get a few more dollars out of it, but folks, it's pretty extended. Okay. So that's LLY. Let's take a look at Starbucks and see how that one, Adam, is looking. And Starbucks is SBUX. All right. So let's open up this weekly chart here. All right. So here, okay, notice if you've gotten in here, you got the big correction. Now the $1 million question is this correction going to hold, and is this going to go up here, or are we going to fall down here? All right. So we've had a fairly big move up, with the overall market. Here's 2009. That's where our starting point for this bull market was on just about every stock we look at. So there's your 3. All right. I want to draw in some fibs. Let's take a look and see if we've got a situation here where we've had enough of a correction, and we kind of have. All right. All right. I may not draw those perfectly, but yeah, that's not too bad. So I think we're in the corrective zone. We hit the pullback here. So what I did is I drew in what they call Fibonacci retracements, and that usually is an area where when you have a wave 4, for example, you get a target zone of where the wave 4 pullback is, and it hit it, okay, between those two blue lines. So that's a good sign. Could it still go back down? Sure, okay. That's always the risk we take when we trade the markets. That's why we put our stops at what we think is the bottom, at least at that point. And if we get stopped out, all right, we'll take the loss, but then we still follow it for the next bottom and try to get back in. All right, so let's see what we got here. All right, so we've got a nice move off the bottom. Let me just also draw in on this weekly chart. If that is the bottom, let's use some fib extensions and kind of get an idea of where that high could be. So we're thinking about 144 to 190 eventually if that bottom is over. So you're at what, 98 here? So you got some room, okay? Some profit possibility. So there's 2 ways you could play this, all right? The lower time frames both have green PTFs. So that's bullish. This is bullish. A little red here. So you got some options. You can either go in now, put your stop at the bottom, and let it ride, okay? However, all right, the daily chart has had a fairly big uptrend. So I would imagine you're going to get a correction probably down into the upper 90s. I'm sorry, not upper 90s, upper 80s or mid 80s. That's very possible because that's about a point of inflection, right? If you draw a 50% move from the low to the last high, it's right around in the 85 range. So it's very possible we could pull back there and then go up. So this bottom could hold, but we might see a little pullback before it resumes. So a couple different ways you could play this. You could use options, okay? Because as long as you protect yourself by buying a certain number of contracts that represent roughly 2% of your trading account, then the most you could ever lose if you're wrong is 2%, which is within the norms of a system that wins 60% of the time with a payoff ratio of at least 2 to 1. So that's certainly a possibility. Or you could wait for the pullback. All right. The only problem sometimes with waiting for a pullback is it keeps going a little higher and higher and higher. and then you end up getting in later at the wrong time. So again, if it was me probably on this, I'd probably wait for the pullback. I think you're going to get a little pullback here, and then I'd be pretty aggressive in getting in. Okay, so that's how I would do it. But I like this one, okay, and I like this one better than LLY because it's pulled back already. All right, thank you. Good, excellent. All right, let's see what else we got here. What about TLT? Okay, now TLT is the ETF for the bond market. And what we've seen in the bond market is that, and this is a great example, all right, of how our indicators work. So notice we had a lot of people thought was a bottom here, and they went in and bought, okay? This indicator, just like it's showing on silver, remember I showed you on the silver one? This indicator is showing that this bottom is not the final bottom. So, any move up here, all right, could be getting stopped out unless you get out on the move up. All right, so we got red here. I want you to look at this. We got red here, and red here. We got red here, and red here. We've got active pyramids here. We got an active pyramid here. There's no reason to be buying this at this time. Okay, it's still coming down. So we'll see, all right? Now, I will tell you what I think here. Just like I said on crypto, this is coming down. I think it's going to be the buy, a great buy, probably one of the, again, like crypto, could be the buy of the lifetime at some point, but not now. All right. So bonds are still coming down. All right. So you definitely want to stay away from those at all costs. All right. So that's kind of where we are on that. I know everybody likes to look at bonds every once in a while. So we'll kind of show those out. All right, AMD is the next one. Let's take a look at AMD here. This is one we looked at also a little while back. So we had a move down. I'm going to open up this chart here. So we had a move down here. There's your wave 3. Okay, look at the, if you go back to here, this started actually in about 2016 and moved up. Pretty big deep dive here, right? Okay, this is green, but this is still red. So it's showing that this wave 3 top will be taken out, and it will with wave 5. Okay, so that's kind of where we're at there. So the $1 million question is here, do we have a bottom here, or are we going to trickle on down and possibly get a little bit lower? Let's see if the lower time frames help us. And they're not showing any red PTFs down here on the daily and the 60. So this certainly could be a bottom. So here's how I'd play this. I'd wait for this to turn green, okay? And then I'd go in. All right, this has to stay green. We can't have any red down here. So if things change where those turn red, then of course that's going to alter what I'm thinking. But for right now, that's the way I would play that. So I'm putting AMD on a watch list. Okay, we've had a really tremendous correction. So it's been great. Once again, the folks that bought here, all right, are feeling pain now. All right, and they probably can thank their newsletters because that's the way they work. Most of the newsletters get them in late, unfortunately. So especially if they're relying on previous history or even fundamentals for that matter, okay? So that's, by the time they're good, it's too late for a short-term trade anyway. All right, so let's take a look elsewise here. What else we got today, guys? Anything else? We've got a nice long weekend coming up. All right, so let's see. We looked at Home Depot. Let's take a look and see. Oh, how about BA&D? Let's see how that one was doing. This is one that we looked at a little while ago as well. And this one was a buy for us earlier. Yeah, we're coming off. There's not as much history on this one. Let's open up that weekly chart. So all the way up and all the way down. All right. The only difference with this one almost looks like crypto, right? The only difference with this one is now we've got green here. We got to move off the bottom. This pyramid prices got above the flat part of the pyramid, which represents the stop out area on a short trade. So the short trades have been taken out according to this. So this is looking pretty good. Let's see how the lower time frames, green back here. I'm thinking pretty good. Now, we've had a nice little move off the bottom, okay? In terms of percentages, a big move, 100% move, all right? So we recommended this one earlier, but now we're probably going to get a pullback at some point. So, you got to be aware of that. Now, where do I think this thing is going? I would say conservatively, I'm not saying it's going to make a new high. I really don't have that kind of crystal ball, and there's nothing technically telling me it will. All right. So I'm saying still, if you just get a modest retracement, you're talking anywhere from the 60s to the 100 price bar range, I'd say, or maybe 126. All right. So that's a decent profit at this. So not so bad. If you go in now, you have to put your stop at the very bottom because you haven't had a pullback yet on this. So keep that in mind. So that's kind of where I'm thinking on that. And there it is. Okay. If you want to wait for the pullback, you certainly can. All right. So one more thing I wanted to mention as well with the new year, okay, coming up. All right. Really, okay, we have a great coaching program that's out there. You're going to want to jump on that because let's make 2023 a great year for everybody, okay? And we can help you a lot with risk control procedures, entries and exits, and so forth. So if you've got our software or you're thinking about getting it, it's a great program for you, okay? We'll really teach you how to use it. All right, so let's take a look quickly. Let's see what the intraday markets are doing. Let's go over to the MES. Now, as you know, we run a day trading room, okay? So we're pretty active in these markets. And we basically apply the tools again to this market. And let's see where we're going on this. So we have on the day trading time frame, we still use the 3 time frames. But check this out. So this is the 5-minute chart. This is now our long-term chart. This is the 1-minute chart. And then we have the 15-second chart. So we're pretty tight here. We're pretty short, pretty short time frames. So we've had a big move down. It's been a little volatile since the opening this morning. But notice I'm going to open up this 5-minute chart. I mean, you can see this is where we make the money, okay, on these big swings either way. So nice move up, but now you got the correction. I would say probably we got a bottom maybe in here. Okay, that's very possible. So let's take a look and see if we're looking good for a long trade. Not quite yet. All right, we still got pyramids coming down. So we're still pulling down. And let's see how far this thing can go before it generates a buy signal. So for right now, all right, we're keeping an eye on it. And it'll be interesting to see if this bottom holds. If this thing comes around, turns around, then we'll load the boat for a long intraday trade. And when we say long on a 1-minute time frame, if you're in it for an hour, you're doing pretty good. All right. Now, also, too, on this, let's check out gold and see what's going on with that. All right. That's kind of coming down. We got a red. It's still coming down. But once it bottoms, we should be good shape for a long trade. I think we're getting close to a bottom, but we're not there yet. All right. Oil. Oh, oil looks like setting up for maybe a little bit higher highs, but that's a tough one. I probably would not trade this one at this point. Okay. If anything, you probably maybe want to be looking for a long trade. Let's check out the MNQ. Look at the volatility this morning. Very, very volatile market. All right. So this one, according to the 60-minute chart, looks more like a short trade in case that changes. I would stay out of this for right now because it's definitely range bound. So you've got on a 1-minute time frame, you've got this range that it's popping all around in. The only way you're going to make money on that range is go down to here. And even then, you got to make sure the range is wide enough to make money on that. So E-mini Dow, let's take a look at that. All right. And that's come down a little bit this morning. Well, the market's down about 290 right now. So that's come down. This PTF just turned yellow here. So we may be getting some type of bullishness short term coming into that. Okay. So that's kind of where we are now. All right, let's go back to the longer position trading time frames and take a look at ZIM. Okay, ZIM, and this is for Al. All right, we'll take a look at AIV next. And Al saying, is this a bottom feeder? Yeah, basically it's looking pretty good, Al. I don't think it's done feeding at the bottom though. Okay, so we got a red PTF here. So it looks like it's going to make still some more lows. But keep an eye on it. We can look at it next week. So I wouldn't trade it now. If you're short, you could stay short. The software has a pyramid trading point stop, hard stop right there. Okay, so you're pretty well protected on the trailing stops there. So you're in pretty good shape. Okay, AIV, let's take a look at that one. And short, he's thinking of short. Let's see. Well, the 60-minute chart would have been the darling chart to go short. Pyramid, stop, 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 stop. Trail, those are all trailing stops. Stop would be right here. You got another one unconfirmed here. So this would have been the time frame to trade this. Okay. What would I do with it now? I probably would not go short here. Okay. The reason for this is you got bullish divergence. So I'm thinking, Al, maybe we're going to get a little bit of a move to the upside on this, and then you may have a better shorting opportunity. So let's draw retracements in. I'd say if it gets to $7.50, okay, you can look. And it turns bearish, because this owl will probably go green if it gets up to this target, and then it should at that particular point roll back over, and then you want to make sure you still have red PTFs on the 60 and the daily. Now, after that makes a new low, all right, then maybe it could be ready for a turnaround in this, because we do have a green PTF on the long term. So we're coming down, but eventually if we bottom here some point, we should start to look at this for a possible buy. But in terms of a short-term trade, I'd wait for it to get to about $7.50 and short it, okay? But I'd check the indicators first, okay? So that's kind of how I kind of work on that. All right, well, I think we've gone through them all today, okay? I think probably in terms, I can't see that I'm seeing anything that really stands out. If anybody has any stocks they think are really good, let me know. Otherwise, I think, we've had some volatility this week that's created some issues for people in terms of what they do. And markets ran up and now they're selling off. So I kind of think at this particular point, we'll see what the new year holds. Now, remember, in January, whatever January does, that usually, statistically, not always, but usually kind of tells what's going to happen for the remainder of next year. Now, as you know, I'm extremely bearish on the market. I think we're looking at a bottom probably on the Dow Jones between 18,000 and 15,000. Let me repeat that, 18,000 to 15,000. All right, hopefully I didn't make you fall out of your chair. But in any case, that's where I think it's going. All right, I think we're in a bear market right now. I do think there's some opportunities for some long trades, but you have to realize that really we are in a bear market, and it is very difficult to trade certain time frames in a bear market. All right, so I guess I'll end there. I want to wish everybody a happy new year. Okay, have a great one, and we'll pick it up next week. And this is my one time where I get to say see you next year. Have a good one, everybody. Bye-bye.